So as you can see, it happened. We had 8 red weekly candle closes for Bitcoin. But what can we expect going forwards? Let's have a look. So the sentiment in the market, as you can see, is the lowest it's been in a long time, hitting 10s on the Fear and Greed Index. This coincides with a $30,000 Bitcoin, which last week wicked below the previous support of around on some different exchanges. We came down to about 25, 26,000. And on this exchange here, we came down to 27, the high 27,000s. So what can we look at going forward? Well, the Fed is still tightening heavily into the inflation narrative, trying to get that under control for the US. Also implementing their interest rate hikes, which is instilling fear on the equities markets, as well as arguably crypto as well. With the S&P being up to 20% down at the lowest point. So as I've said, there's fear everywhere, people calling for lower price targets for Bitcoin and also the S&P. A lot of calls that I see for Bitcoin are the lower 20s, so between 22 and 25,000, but I've seen calls all the way down to between $10,000 and $15,000 Bitcoins. And it's easy to understand why you might think that with the sentiment of the market as it is and the wider implications of economics right now. Obviously, we still have all the geopolitical unrest with war, supply chain issues, and energy crisis in Europe. Obviously, massive factors onto the market. But let's look at some forward-looking indicators that might suggest we could have bottomed. Well, the first thing I'd like to point out is this huge volume candle here for Bitcoin when we did wick below that support level, meaning there were some buyers that came in and stepped in to save Bitcoin from dropping any further. I would also like to say that even in the face of a black swan event like the crash of UST and about 60 to 70 billion dollars being wiped off the cryptocurrency market, Bitcoin still managed to hold in and around the $30,000 region. I think this shows quite strong strength. It's just being kind of pushed under the rug because of the sentiment of the global markets in general. So what we need to see is inflation start to come under control before we may see a pivot from the Fed. And before they pivot, they will start to drop hints verbally, and from there is where we may start to see a rally. A few forward-looking indicators for this may be if oil breaks down below this trend line, which in turn may lead to less market uncertainty and a further breakdown in depreciation in the DXY, which everyone's looking at the minute, and also the 10-year Treasury bonds to continue in their 20-year downward movement. These are all at key inflection points at the minute, and the market is literally on a knife's edge. However, nothing is massively broken apart from that over there in the S&P, but if all these other indicators reverse, I think the S&P can be saved. So I'm going to leave you with a thought to sum this video up. I personally have buy orders in if we do come further down, but what do you think is going to catch people off most? A continuation to the downside when everyone's calling for that, or a big fat pump to the upside? I'll let you decide. Peace up, A-Town down.